A common and often confusing part of estate planning is taxes. Who pays and how much? To help make your life and your estate planning process a little easier, I'm going to walk you through the answers to one of our frequently asked questions. When I die, how will my revocable living trust be taxed? Before we get into the tax details, let's first get an understanding of what a trust is, and more specifically, a revocable living trust. When you, the grantor, set up your trust, you are creating a rule book that is attached to a box, and that box contains your assets. That rule book contains specific instructions for how the assets in the box should be managed and who has permission to use the assets in the box. The rule book also appoints a trustee to carry out the instructions noted in the rule book. A revocable living trust, which can also be known as simply a revocable trust or a living trust, has certain characteristics, the most obvious being that it's revocable, meaning that the person who established the trust, the grantor, has the power to change, modify, or terminate the trust. You can put your stuff in the box and take your stuff out of the box at any time. After the grantor establishes their revocable living trust, the grantor's personal income taxes do not change. Revocable living trusts are disregarded by the IRS and do not need their own taxpayer identification numbers. When assets in the revocable living trust box earn any income, that income flows through to the grantor, and the grantor pays any taxes due. Now, when the grantor passes away, what was a revocable living trust becomes an irrevocable trust, meaning it can no longer be changed or modified. Irrevocable trusts are not disregarded by the IRS, and a tax return must be filed. The trust will then have its own taxpayer identification number, and the trustee must report the trust's income on a separate income tax return. Having said that, irrevocable trusts often have no taxable income to report. Even if an irrevocable trust does have taxable income, the trustee will often opt to distribute such income to the beneficiaries of the trust. In that case, the trust itself will pay no income taxes, but the recipient of the income, the beneficiary, will report that income on their individual income tax return, where it will be taxed at their own income tax rate. All of that being said, taxes and navigating the best course of action with your trust can be confusing and overwhelming. You are not alone in that. We help people in these types of circumstances every day. To learn more about how trusts are taxed and other important estate planning issues, give our office a call, and one of our client welcome specialists will be happy to assist you.